This video again on my YouTube channel. To start with, those that are new, don't forget to like, subscribe, and share the video. So today we're going to be looking at a weekend market breakdown. So this basically containing my week, this past week market analysis and the trades that we took with the community. So having with me here, we're looking at 3 pairs that we took with the team and the community that gave us over 100 pips. So we are going to look at gold, we're going to look at USD CAD, and also USD Chef. So I'll be taking you through what made me take the trade, why I took it, and what made me take the trade. So stick around, don't forget to share the video. Okay, so starting with, I'm having USD CAD on my chart here. So we're going to go through what made me take the trade there and what made us look for selling opportunities at that particular point. So starting with, for those that have been following me for a long time, you know to say I'm a pure price action trader. That means I don't usually use, to make that statement clear, I don't use indicators, I don't use any system or any of that. I believe in understanding the market. So I use market. I'm a pure market structure trader. So I believe in understanding the market before I do anything. So let me just clear my chart and let me walk you through. Okay, so this is USD CAD on 1 hour. So for me, I'm a multi-time frame analyst. So I usually start my analysis from the higher time frame before I make my entry. So let us jump to the daily time frame as we break down the market. Well, let us just start at the weekly time. Let us try to see what's on the weekly time frame. So this is what we're having on the weekly time frame. Amazing weekly time frame. So first and foremost, you have to identify your highest point and your lowest point. Okay, so I try by all means, when I'm looking at the chart, I have to trap the market in between 2 major levels, and by levels I'm talking about support and resistance. So at this point, I'm trying to identify, let me just take it to this point. This is my current high and this is my current low. Okay, so this is my resistance and this is my support. So this is the lowest that the market has gone so far ever since 2021 on the 7th. That's on a Monday. So on a Monday, we've been seeing the market rise, and starting 2020 March on the 16th, the market has been bearish to that particular point, and the market is currently at this point. This is our high and low. Okay, so let me just bring it in. And this is, we have put that and also that particular point. Okay, so let me just switch back to my candlestick analysis. So we can see the market touch that particular point, touch this particular point and give us a strong move to the downside, touch that point, give us an impulsive, the market failed to break above, as a result came back down. From there you can see the market came back for this level here, of which the candle closed above but failed to push above this particular point. So basically what I'm having here, this is a zone. So the market came to this level, failed to break above, came back to this. As a result, you can see the market is giving us stairs to the upside. Okay, it's giving us like a stair. The market is coming to bounce at that point. So not forgetting we're having a supporting trend line at that particular point. Okay. So this is what we have. The market has been bouncing from this level as well. Okay. So the past week, we as day traders were trading in between this candle, this bearish candle. That's the candle that we were trading in from Monday to Friday. So let me just identify this one. Okay, so I'm going to change my color on this one. It is put trade, and also this point, let it be red. Okay, so this is the weekly high in a candle, in a bearish candle, as we can see. It is a weekly high. And this is weekly low. Okay, so let us take this on the weekly time frame. Let us jump to the daily time frame. Okay, so as we move to the daily time frame, we can see that this trend line still valid, or was valid. You can see that touch, and this touch, that touch. The market is likely to come back to this point, then give us we can either look for that, or we can break below this particular level. Rule number one when you're analyzing: always keep your chart clean. Always keep a chart clean. Okay, so this is the weekly high that we were trading in. That's the highest that the market went. So we have let me do this. Okay, let me just remove it. Okay, so we can see the market also giving us that. Okay, market came back to this point, went down, came back to that point, the market came down. So this is on the daily time frame, and if we were to zoom out in the daily time frame, we are also having this has got its twin, which is this particular twin here. Always keep a chart as clean as possible. Always have a clean chart. So we are focusing on this chart going this side. This is our focus. Okay, so the market is actually has been trading in between a continuation pattern, which is in a triangle form. The market was coming from the upside with a strong bullish trend, came in this as a result of a consolidation. We're looking for a breakout to the upside. So more bullish confirmations are yet to be confirmed above that particular point. So we're aiming to look for buying opportunities, or the market to come to this point, look for a rejection, and the market to start doing what? Market to start giving us that push to the upside. Jump to the 4-hour time frame. When we jump to the 4-hour time frame, we just try to perfect our trend line. Okay, that's our trend line. We are looking to see the market come to this point and look for that move to the upside. We correct this one as well. So a trend line, this is a parallel support and resistance that connects highs and lows, higher highs and lower lows. Switch back to my candlestick. So we can see the market was massively selling at this point, went back, came back, went back. We're trying to see it come back to that particular point. So this is quite a sensitive level. We have got this first push, that second push, and this push to the upside. So when we jump to the 4-hour time frame, let us okay. Okay, wonderful. So this is what we're actually seeing when we look at the historical data or the historical trend, the previous trend. We can see the market was in an upside or in a bullish market structure, was giving us higher highs, higher lows, higher highs, higher lows until it reached that particular point. So as we all know, the forex market is actually a battle or a challenge between the buyers and the bears, which are the bulls or the bears. So from there, if we introduce trend lines, we can see that the market broke our trend line there, and if we were just to squeeze our trend line in like that, we can see the market bounce from there, bounce from there, bounce from there, bounce from there, and we had a break of structure at that particular point. What does it mean when the market gives us a break of structure, or when the market breaks the structure? That means the market is trying to shift the form of what the structure it was in, from a bullish market structure towards a bearish market structure. So let us put this as our next week highlight. Okay, let us not focus much on this. We're trying to look at the past now. Okay, so from there we can see a clear M pattern formation, which is known as a double top. From there, and we can see a nice neckline at that particular point. So the market broke to the downside, came and touched this historical market here. From there, the market bounced up, rejected at that particular point, and we can see a strong and massive sell. You can see that strong massive sell to the downside. Okay, so this is what we're able to see on the 4-hour time frame. So when I looked at this chart, I was confirming with an M pattern formation where I actually found the market was at this particular point. So after seeing and identifying the structures that I'm showing you guys, these were my confirmation. The first confirmation was that the market broke below this point, and it broke below my neckline, and as well as we're having what, a double top, which is a reversal pattern, commonly known as an M pattern formation. From there, I jump to the other time frame, which is the 2-hour time frame. So if we jump to the 2-hour time frame, we can clearly see many buyers at this point. The market came to hit their stop loss. So at this level here, that's where many traders had put their stop loss. So if they were aiming to, if they aimed to enter from here, they actually lost about 22 pips, or that's 20 plus pips. So they lost 20 pips trying to buy from that particular point. So the shift of market structure started from this particular point by giving us a reversal pattern. So already the market was trying to reverse, hence giving us strong candles to the downside. As a result, the buyers were being challenged and overpowered. So upon seeing this breakout, waited for the market to touch this particular point, rejected, then we start making our entries at the bearish candle at that particular point, which was on the 1 hour time frame. So for me, I usually make my entries on the 1 hour time frame. So when we look at this weekly high here and the weekly low, the market has actually sold from our entry 1, entry point 2 till that particular point. So there, what made me enter my or place my entries at that point, because of this historical data. From there we can see the market started rejecting, then it gave us this strong bearish trend. From there, then we started hunting for selling opportunities. From there we can see a sharp move to the downside. The market gave us a breakout. The market gave us a breakout from this point, then gave us this minor reversal pattern, which was actually a strong one, minor but very strong. So we don't really need to underestimate these points. So we can see that point. Our first entry was from this point, stop loss above, and our target there. From there, the market was still giving us good bearish opportunities to the downside. We looked for selling opportunities from that particular point, stop loss above, which actually gave us some good pips to the downside. So from there, how do you say your support and resistance as your TP? By looking at the historical market rejection. So from there, TP1 was smashed, TP2 was smashed, TP3 was what was smashed, and the market was still moving to the downside until this particular point. So this made us to hit over 100 pips at that point and 135 pips at that particular point. So this was actually what influenced my entry on USD CAD, where we caught over 200 pips on USD CAD. NFP went in our favor, and the previous fundamentals also added on to these strong and mighty moves to the downside. Let us look at USD CAD. Okay, so this is USD CAD at 1 hour time frame, where we started looking for an entry. At that, we actually caught this move to that point, then we waited for the market. The market actually touched our TP, then went back to this level to collect towards liquidity from there, which was during a fundamental. From there, we actually caught this fundamental coming to this particular point. So this inside here, you can see this was my prediction, but the market hasn't really reached this particular point. So let me just delete this again so that I give you guys an insight of what I was looking at as well. So we start from the weekly. This time let us just quickly identify the highest. So even on the weekly here, we can simply identify this important formation here. Where the double top, this was actually a market hunt of where people that sold this particular point, sorry, people that were looking for an early entry at that point, the market swiped them, then the market stayed coming down. So on the weekly, we can also see this structure that it gave us, which was the break of structure, market retest, and this strong move to the downside. From there, we can also identify what we can also identify our current high and our current high and our current low. From there, we can see this point, and we can also see this point. So basically here we can all see that this was a bearish market structure, which was giving us this pattern of low highs, lower lows. So from here, the market gave us a lower low. It's aiming to give us what? A low high. So looking at the previous, what really influenced my entry on my previous week, let us jump to that. So don't forget, well, we also saw this one. So this was the weekly low. This was the weekly low, and this is the weekly high. Okay. Okay, so we have our weekly high here. So let's say weekly high. So when we jump to the lower time frame, this will actually make a lot of sense, as you saw on my other one. So this is our weekly low. And this candle was for April 2023. This was for in April. Okay, so let us jump to the daily time frame without wasting much time here. Okay, so this is our daily time frame. That was the high and this was our low. Switch to so we switch to our 4-hour time frame. So our 4-hour time frame, we can see the market soared from that point where the price failure, the market failed to break above this point. As a result, the candlestick was created below our resistance or our high, influencing this sell to the downside. From there, we can also identify why the market bounced from there. We had the rejection, and the rejection at that particular point as well. And we also have another rejection at that particular point. Okay. So this is on a daily time frame. So our structure on the daily time frame, let's just look at the structure. Our structure on the daily time frame is giving us a strong bullish trend. So we were trading in a bullish overall trend. We are trading in an overall bullish trend here. Let us note that down. Okay, so this is on the 4-hour time frame. When we jump to the 2 hour time frame, that's a lower time frame. So from here we can see the market sold from this point. Sellers started taking full charge from our weekly high, which is our major resistance. You can see that's massive sell. The market sold to this point, and the buyers rejected, the candle closed above. From there, we actually experienced the market with low volatility, waiting for fundamentals. So from there, we can also see this point. So this was actually a minor head and shoulder. But that the market came back down, the head market came back down, the shoulder there, then we can see this strong move to the downside. So the forex market will take you, or will need you to be creative. You have to be creative in order for you to do what, to spot out certain patterns, because they're not going to appear the exactly way you saw them in the books. So you have to be what, you have to be creative. So we can see this consolidation there. Okay, so let us jump to my 1 hour time frame. So the 1 hour time frame, we actually saw that neckline there, then the shoulders there, as I said it. Then I also identified my previous inside trend of this bullish trend, which was giving me a break of structure at that point. So we had a break of structure, the market coming back down to confirm a low high, lower low. All we needed was for the market to confirm a low high. So from there, the market confirmed a low high by giving us a bearish continuation pattern. From there, and we actually made our first entry from there. Okay, we actually made our first entry from there, coming to this point. Stop loss that point. From there, we're actually hoping for the market to come to somewhere at this point, and it failed, then went back up as a sign of retest. So at the breakout, the market came back to collect liquidity on this point here. So we actually caught this on a sniper entry, and we caught it at this point. Stop loss was above, and we're still aiming for it to reach that point and that particular point. So we actually caught this point, which was a massive sell as well on USD CAD. So sell high and buy low. So at this particular point, the market could either retest from this level, or go back to this level, then come back down, or create a market structure to push back to this high. Because what we have to put in mind is that we haven't yet touched the weekly low. So it's either the market goes back up and disrespect the high, or comes back down and respect this point, then finally goes up. So this was my analysis and what influenced my entries on USD chef or USD Swiss franc. And finally, let us look at gold. So gold as well. I actually made my first entry on this point, second entry here, third entry at this particular level here. From there, the market reached our target, but yet I was still hoping the market could reach that point after coming back. But guess what? The market massively sold as well. So let us look at what influenced my selling opportunities and what levels I was looking for at that point. So let me just delete everything here and weekly time frame. So gold has been selling from there. If you can look at the weekly time frame, we had a triple top there. This is actually a three top or triple top. So this actually means the market tested this point 3 times, and this point still proved the market to be what? A strong point. So what we are interested in is the past week candle. Past week candle we're interested in is this one. So we have our market low, and also we have market high at that point. So this is our what? Our weekly high, and this is our weekly low. Without wasting much time, let us jump to the daily time frame. So we can see the daily time frame. Zoom out. If we can start analyzing from the daily and looking at the weekly high and low there. So what structure was this? Firstly, you have to understand the structure before we conclude. So we had a high, the market came back to create a low, a high, low, high, low, high, low, high, low, high. We had a break of structure here, which is this point. So that means the market is looking for what? A shift in structures from an uptrend. The market is looking to do what? To sell. The market is looking to do what? To sell. We have this structure confirming our bullish trend, and okay. So from here we can see the market touched that point, went up, came back down to fulfill this point, and giving us a fake breakout at that point, but still the market pushed to the upside. From there I've got that low and making this point as our high. Let's jump to the forward time frame. So on the forward time frame we can see this massive buy from here, and market side selling from that particular point. So this was on Friday. Let us look at what I was looking for to make my entry. So I said looking for entries at this point. Let me just say this point. So at this point we can see this is a strong and sensitive level at that point. Okay, where we had the market bouncing from that point, that point, and as well as that point. Okay, so here we are possibly hoping to have an inverse head and shoulder, that point being the head, the shoulder, and the other shoulder at that particular point. But looking at how the market has gone down, we are no longer looking for this. Okay, and we can see this previous trend here. From there the market rejected, break to the upside, market retest, another market retest to there. So it is not an uptrend unless the market breaks above this point. So as long as we were below this point, the market was looking to sell. As a result, each time the market comes to this point, we can see this massive sell. Market comes, massive sell. Market comes, massive sell. Break of structure, the market bought. So we are now looking for buying from support and selling from what? From resistance. Okay. So this is what I'm having. This is what we had we had a strong zone here. Strong zone from there, and our next level there, making this our support, resistance, and our medium level here. Let us jump to the 1 hour time frame. So I haven't explained on the 2 hour time frame. So this is what I was looking out for. So we can see this multiple test here. So this actually confirms that it's a strong point. So after the market broke above this point, they're giving us opportunities to go back up or to go up. Then we stay looking for what the properties or the uses of support and resistance. It helps us to look for what buying opportunities. As a result, we buy above support and we sell below resistance. So this was what actually was happening here. We are looking for buying opportunities above this point. And if the market broke like it has done here, then we're looking for selling opportunities because the market has disrespected our support. Move to the 1 hour time frame. So in the 1 hour time frame, I actually caught this point, moved to the upside, but we're still open for the market to push, but it actually gave us this huge sell. Come back to the zone, of which this candle rejection, it's a reversal, a candle of which we all know for, then actually took entries from that point, was aiming for this point. From there, we had some fundamentals. That made this candle to come back down after eating those pips. Then we had some levels coming back down, okay, which was coming to test this point here. So from there, the market tested that point. Then started looking for buying opportunities, hoping to push to the upside. Then we brought this stop loss was actually at that point. We're looking to push to the upside. Okay, so from there we actually see the market really gave us some beautiful pips and amazing profits from that point. It gave us amazing profits at that particular point. So at this point, we took our profits, waiting for the market to react. If it breaks above, we start looking for more opportunities, or if it rejects this point, we start looking for more opportunities to the upside. So nevertheless, the market, the NFP came down. Then it's actually brought in more volatility, giving us that reversal pattern there. You can see the market is massively selling. So the market can either aim to come where to our low this point, can aim to sell off to this point. So next week you can expect the market to come to this low, then go back or break below this particular point. So this was my 3 setups. This was my actually interested and amazing setups that I shared with all my community groups, and these were the same setups that gave us 100 where I gave us over 100 pips. So this was what actually influenced my entries, and this was actually my simple market analysis indicating my bias, and my bias to the upside and my bias to the downside. So if you have enjoyed this video, don't forget to subscribe, like, and share this video to help reach many people out there. So this is where I end on the weekly market breakdown. Join me next week.